to the Q4 FY26 and FY26 earnings call of National Aluminium Company Limited, NALCO conference call hosted by Systematics Group. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Ms. Shweta Dikshit from Systematics Group. Thank you, and over to you, Mr. Dikshit.
Thank you. Good evening, everyone. On behalf of Systematics, we welcome you to the Q4 FY26 and FY26 earnings conference call of National Aluminium Company Limited. I would like to thank the management for giving us the opportunity to host this call. I now hand over to Mr. Bharat Sahu, Company Secretary NALCO, to discuss the company's financial and operational performance. Over to you, sir.
Thank you, Shweta ma'am. Namaskar, good evening. Greetings from National Aluminium Company Limited. On behalf of NALCO Collective and especially from NALCO Board, let me welcome all esteemed investors, analysts, fund houses to this earnings call hosted by Systematics Group. Today is a historic day for NALCO. The Board of Directors have approved the financial statements for the financial year 25-26, registering the best ever performance in every front. We have our CMD, Sri Bijendra Pratap Singh, along with our other functional directors, Director of Production, Sri Pankaj Kumar Sharma, Director P&T, Sri Jagdish Arora, Director HR, Dr. Tapas Patnaik, Director Finance, Sri Abhay Kumar Behuria, and Director Commercial, Sri Anil Kumar Singh, in this conference call. And presentation on this Q4 and FY26 is already uploaded with the stock exchanges as well as in the company's website. And I hope Systematics Group must have also circulated it to all our esteemed investors. And now I request our CMD sir to kindly highlight the results and also the outlook of the company. Over to you, sir.
Good evening. Good evening to everyone connected over VC. All our directors are present here in this our boardroom, and our company secretary Bharat Sahu. Everyone connected through VC along with the systematic groups. Today we have declared our results, and with a very robust performance of the company, I would like to deliberate on the highlights of the I would like to deliberate on the highlights, achievements of the organization. This year we have done best ever physical performance in all the areas: bauxite excavation, alumina hydrate production, calcined alumina production, metal production, net power generation, wind power generation. And all the areas, the growth is there compared to 25, the actual production of 24-25. Bauxite production around 6% growth, hydrate and calcined alumina production around 11.5% growth, cast metal production around 2.61% growth, coal production from our Utkal coal block around 41.84% growth, power generation from our power units 4.7% growth, wind power around 9.25% growth. Along with that, our sales performance also have been robust. We have done best ever sales both in terms of alumina and metal, aluminium metal. Alumina sales has grown by around 30.74%, and metal sales, that is aluminium sales, has grown by around 2.8%. So all the physical performances in all areas and sales performance has been ever best. Backed by this performance, our financials also, we have done best ever financial performance this year. Last year we had best ever in 24-25, and we have surpassed those figures. Revenue from operation in the year 24-25 was 16,788 crores, which has gone up to around 17,843 crores. a growth of around 6.28%. EBITDA has grown from 7,922 crore to 8,613 crores, around 8.72% growth. Profit before tax from 7,135 crores to 7,767 crores, around 8.86% growth. PAT from 5,325 to 5,816, around 9.22%. So all these financials are also ever best, and all these achievements what we have done, the two major reasons of this achievement were dedicated and hard work of each and every employees, support of our stakeholders, support of our ministries and governments, and our physical performance was best ever physical performance. We have improved not only on the volume, we have improved on the techno-economic figures also, like caustic soda consumption, CP coke consumption, furnace oil consumption. All these areas also a lot of savings we have done. So with increase in volumes, increase in our efficiencies, we have increased our profitability in spite of reduction in the alumina prices. The alumina prices, if we see year on year, around more than $200 it has gone down. In the year 24-25, average alumina realization was around $580, which has come down to around $370 this year. Of course, in metal side, the average realization has increased from around 2550 to around 2700 US dollars. So major highlight is that we have been able to tap our potential, reach to the fullest capacity of our potential with the good improvement in our techno-economic figures. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Welekar from Axis Securities. Please go ahead.
Yeah, thanks for the opportunity and congrats for the great set of numbers. So just wanted to understand on alumina front, if you can throw any guidance on FY27 production and sales volume, both on alumina and aluminium.
FY27, if you see, our target is our fifth stream refinery is coming. So we are planning to add, because that commissioning will start in June and maybe take 3-4 months to reach to the production level. So this year we are planning, optimistic planning we have done of 2 lakh tons. So around 25 lakh tons of alumina production and sales we are planning. That is around 2 lakhs more than the previous year. And if it will further increase as far as the commissioning process goes. As far as the metal production is concerned, metal production again we have targeted more than this year, slightly more, because we have already reached to the upper limit. Our capacity is 4.6 lakhs. Last year we have done around 4.71 lakhs of tons of metal production. This year we have planned around 4.73 lakhs tons of metal production. So both areas in alumina and metal we have looked for the growth.
So what is our exposure to Middle East in terms of alumina exports? Is there any impact of on the sales volume next year?
Our alumina export to the Middle East, of course, that was going earlier in the previous years. Lot of around 40-50% of our export was going to Middle East, which has got affected. But now from Indonesia and other places also orders are there. Of course, that has resulted into the reduction in the spot prices. The spot prices has gone down to as low as around $310 to $305. That is the effect of the war. So once this smelters of the Middle East smelters, the production curtailment is there. So till they reach to the fullest capacity, there will be effect on the alumina pricing in the spot prices.
And in terms of volumes, any impact on sales volume because of this disruption there?
Sales volume till now, no. Our volumes, whatever spot tender we are doing, we are getting the orders. In fact, in our last spot tender, we got the order of around 36 orders we are getting. We are trying to increase our presence in the domestic market also. Like last two, around 24, 25, our domestic sales was 40,000 tons. This year, 25, 26, we have done around 1,40,000. We have increased the volumes of in domestic sales by around 1 lakh. This year again we are targeting to further increase, go to around 2.5 to 3 lakhs, I think, or something like that. And so we are targeting domestic market to further increase the volumes, and we are trying to have some long-term relationships, long-term engagement with smelter manufacturers across the globe, so that we have the comfortability of selling aluminium to the smelters.
Okay, got it, sir. Thank you. I'll get back to the queue.
Thank you. The next question is from the line of Manav Gogia from Yes Securities Limited. Please go ahead.
Hello. Yes, a very good evening and thank you for the opportunity. First of all, congratulations for the strong year that you've had. So one question follow-up from the previous participant. Could you give me the average alumina realization price for the quarter? And how is it shaping up in Q1?
Quarter means which quarter you are asking?
For Q4, what were the average alumina realizations and how is Q1 looking?
Q4 25-26.
Yes.
Q4 25-26, average realization was somewhere around 3,000. Alumina you are talking, or aluminum?
Alumina, the chemical.
Alumina.
Yes.
Alumina, it is $348. 348 was there in Q4.
Okay. And how is Q1 looking?
Q1 it was 460. No, Q1 this Q1. Q1 this one.
Yes, Q1 right.
It will go down, further go down. It is around 320 average we are getting now.
Okay. Okay, got it. Okay, sir. So just one question. Are we, because aluminum prices are quite strong, are we putting any hedges in place, or it's going to be directly linked to LME, how we have been doing till now for aluminum?
Hedging we are not doing. It's directly linked to LME. Since LME is on the rise, so that's why we don't require to do any kind of hedging.
Okay, got it. And so for volumes for alumina, you just stated that we are going to be doing incremental 2 lakh tons from the new refinery. Earlier we were targeting 5 lakh, 50% utilization. Then we had got it down to 30%. Now we are sort of at a 20 to 25% utilization. So I mean, are we expecting some delays, or is it? How should we look at it?
In fact, not delays. We were expecting that by June, some delays will be there, because we were expecting that by June we will be completing the total production commissioning process. But in June we are starting the commissioning process. It may take 2-3 months to complete it. 2 lakh is a very optimistic figure which we are targeting. Maybe it can further go up if the commissioning process is completed early.
Oh, okay. And so my second question would be, where are we in the process for the new aluminium smelter, and how should we take a look at the capex number going ahead for the next 2-3 years now?
The new aluminium smelter, already we have placed the order for making DPR for both smelter and our power plant. The preparation of DPR is under progress. Technology licensor already we are appointing. Our target is by this year, maybe September, October, August, September, we will be able to complete the DPR, get the board approval, and start the tendering process for procurement, which will take 6 to 7 months. Means next year, April, May, we can complete that ordering and start the actual groundwork. And it will take around 3.5 years from there. Our target is by December 2030 or maybe early 2031 to complete the overall commissioning.
Oh, okay, got it. And how does the capex number look for 27 and 28, and where can we see the capex, peaking out?
CapEx, like this year, the CapEx will not come, but 27-28, the CapEx will start coming once the ordering is done. So CapEx will further CapEx for phasing. How much have we have done? 27-28 we may increase 2,000 more, but around CapEx will be around 4,000. This year we are targeting around 1,800 to 2,000. That is 26-27. 27-28 it will go to 4,000, somewhere around 4,000, and similar kind of CapEx it will further increase. Further increase because our total investment will be around both if we see power plant and this will be around somewhere around 30,000. So that will be phased out in around 3 to 4 years from next year onwards. That is 27-28 onwards. So maybe first year will be around 4,000 to 5,000. Next year it will further go to around 8,000 to 10,000. And
28, 29 and 29, 30 will peak out.
Will peak out to around 8 to 10,000 somewhere along.
Oh, okay. Got it. Thank you so much, sir. All the very best. I'll join back the queue.
Thank you.
Thank you. The next question is from the line of Sanakin from HSBC. Please go ahead.
Thank you very much, sir. First of all, can you give us the alumina and aluminum cost of production in the fourth quarter, and what would it be today in 1Q given the cost inflation that we have seen?
If you see the cost of production of our alumina and aluminium, our cost varies from 20,000 to 22,000 in between. Okay, and if you are talking about aluminium, it is 155 to 100, 155 to 160. That is right. But the first quarter, the cost will not increase much, though there is some increase in the input cost. But since our employees' costs are getting down because of the high paid employees are getting retired and we are recruiting a new one. So whatever extra cost we are incurring in the input cost, that will be set up by our fixed cost, reduction in fixed cost, employees cost, power and fuel. So there will be much hike in the cost. It will be varying in that range only, within 160,000.
So, sir, that's very good to hear. But do you expect that trend to continue in the second quarter as well? Because we are seeing caustic and fuel oil and carbon prices all rise very sharply.
Hey, you are expecting that. What is? Suppose there is increase in the caustic and city pitch, but we are going to increase coal supply from our captive mines. Our captive mines, which called D and E, that will give us some comfort. Whatever cost we will be incurring, additional cost and the input cost outside HOA, that will be to great extent will be compensated the reduction of the power cost, coal cost from our captive mines, because in the next year we are going to increase production by 8 lakh more. So that comfort will be getting.
Got it. So my second question is that the Japan aluminium premiums have risen very sharply from just around $100 to nearly $300 per ton. For Nalco's aluminum sales, what were the premiums that the company realized in fourth quarter, and what do you think will be realized now?
On what? Metal. You mean metal? Metal, we have a pricing policy. We don't change it frequently, the premium part. We have a mechanism of pricing calculation, and we have fixed the premium, I think, 6-7 months back. That pattern we are following. So it is linked to the LME, so we don't change our premium frequently, because that is a transparency policy we are following. So that gives very confidence to all of our stakeholders. So we don't link it to the Japan premium regularly. It is fixed. I think last year it was fixed, and that is continuing. We don't change.
Do you expect to revise it anytime soon, sir? Given that the premiums have risen very sharply across Asia.
Maybe within a month or two we'll be going for some export tender, and whatever premium we will be getting there. Our system is we go for export tender within every 6 months, something like that, and whatever premium we are getting, that we adopt for next 6 months. So we will be going for export tender, and whatever premium we get, then we will include in our pricing policy.
Got it. Thank you very much, sir. This is very, very helpful.
Thank you. The next question is from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good evening, sir. So just a question on, you mentioned about, sir, the employee costs coming down. But in this particular quarter, we've seen, almost a 13% increase YOY and a 26% sequential increase compared to third quarter. So is there any one-off or any gratuity provisions that were there in this quarter?
You're telling quarter to quarter?
Yeah, employee costs.
Employee cost overall, year to year, it has gone down
18% to 16%.
Year to year, if you see, it has gone down as compared to 24-25. And financial year, it has gone down by around 65 crores employee cost, because we have retirement of around 351 people and we have inducted around 358. But whatever retirement was in the higher pay scale and the induction is in the lower pay scale.
If you compare the quarter to quarter, it is not the right picture. Some of the provision is being made at the end of the year. Actual valuation, everything. And if you see the overall 24-25 and 25-26, there is a reduction of 2%. 24-25, our employees cost composition of total expenditure, it was 18%, and this year it is 16%.
Sure, sir. And we expect this to continue, right? In FY27 also, we don't see a material increase.
I think it will continue. This year will be...
FY27 also further superannuation is by around 250 numbers.
250.
And our recruitment will be also similar kind of thing. And superannuating staff is always on the higher pay scale and the people joining are on the lower pay scale. So similar kind of savings will be there.
Sure, sir. Also on the other expenses, again, maybe because of the fourth quarter, there's been a significant increase on a YOY basis at about 850 crores. So again, is it some year-end provision which will probably not be going ahead? Other expenses, sir, it's about 850 crores for this quarter.
Other expenditure, actually, we have made some extra provision because of the statutory reading, our Red Mud Fund 1. So there is a statutory provision that after you utilize that Red Mud Fund, you have to give a complete cover of that, which is green and everything. That we have made a provision of around 40 crores for that. Second additional provision we have made for our fly ash utilization. Because the nearby area where we are used to dump our fly ash, that has been adjusted and we have to transport further distance. So we have made a provision of transportation cost. So that has, I think we have kept 54 crore additional. These are the expenses we have taken in the fourth quarter. So that's why there is some additional impact.
Okay, so almost 90
That is the provision, not the cash expenditure, that is only provision.
Sure, sir. Also, so and what was the capex that we actually incurred in FY26?
FY26.
This year,
FY26 capex around 2,000 crores, 2,008 crores.
Sure, sir.
Our target was 1,700, but we have exceeded by almost 400 crore more.
Sure, sir. So, and just lastly, coming back to the alumina pricing scenario. So, I think you had earlier mentioned that Indonesia, the smelters were delayed, but the alumina refineries had come on stream, so there was a pressure on pricing. So, by when do you expect this to probably normalize and the smelting capacity, to start operation in Indonesia?
Indonesia smelting capacity is going to start this financial year end, some of the smelting capacities. But in spite of that, their refineries capacities are on the higher side. There will be an excess of alumina in the market every time, this year or maybe next year. And with this, some of the smelters in the Middle East going down, and their revival itself will take around 7 to 8 months or maybe 1 year. So this financial year, there will be an excess of alumina in the market, and the pressure on the pricing will be there.
So, but I think in the Middle East, there was some alumina refinery capacity also. So, is there any impact on that, or that is operating at normal levels right now?
The refining capacity is less than their smelting. They were importing the alumina. So refinery, as of now, we don't have any update on the refining capacity, whether it has any effect on that. But of course, smelters, 3 smelters, Vantalam in Qatar and EGA, Dubai, and one more smelter has got affected, and they reduced the production by around 50%. So that's why their overall alumina consumption has gone down.
Okay. Sure. Yeah. Thank you so much.
Thank you. The next question is from the line of N. Modi, an individual investor. Please go ahead.
Yes, sir. Thank you, sir. Sir, at what percentage of this coal and caustic soda we are able to produce, sir, captive?
What percentage of coal?
Yes, sir. About total requirement, sir, coal and caustic soda.
Overall coal requirement is around 7.2 million ton. Out of that, last year we have produced our own, Utkal mines have produced around 4 million ton. This year we are targeting 4.8 million ton. That is our in-house coal production. Out of 7.2, 4.8 this year will be producing. And as far as caustic soda is concerned, around 50% of our total requirement is produced in our JV, that is in GNL.
Yes, sir. And balance we are procuring from outside, sir.
Rest caustic soda we are procuring from outside, and coal maybe around 2.5 to 2.7 million tons we source from MCL through our linkage route, fuel supply agreement route.
Right, sir. One more thing, sir. This price of caustic soda has gone up during the last 2-3 months.
Yes. The cost of caustic soda has gone up. It has gone up by how much?
The caustic soda, if you compare the last year average, it was beginning of the year it was around 38,000, and 25-26 average cost is around 42. And first quarter we are expecting 45,000.
From 42 to 45,000, it has gone in last 6 months.
Yes, right. Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Vikas Singh from ICICI Securities. Please go ahead.
Hi, sir. Good evening and thank you for the opportunity. So my first question pertains to your previous remarks that you said coal would be 4.8 million tons from the captive sources next year. So have we received the EC clearance? Because as far as we are concerned, I think we had 4 million tons of EC.
That is almost under process, and we are very much sure that next coming 3-4 months we will get it.
Yes, sir. So second question pertains to the rare earth lithium projects which we are about to take off. So anything happened in Kabel or any other segment any positive there? If you could give us some idea.
We are not getting you.
You are not clearly audible. Just if you can repeat your question.
I'll repeat myself, sir. So regarding, there was a lot of news of us about this exploring the rare earth and critical mineral assets as well. Apart from the Kabel, Argentina mine, have we scouted or zeroed down on anything else?
Apart from Kabel, we have taken 2-3 projects. Gallium recovery is one order. Let you know.
In rare earth and critical mineral, we have a huge amount of red mud lying with us, and there some projects we have taken it up. And in coming times, there are some visibility that we'll be getting some valuable item from this. But presently, these all are at pilot scale level. It will take another 2-3 years to firmly decide upon the value which we will get out of this. But in some of the projects like gallium extraction project, we are at the advanced stage of putting up a pilot plant, and we will get the first right of extracting and putting up a gallium plant down the line after 2-3 years.
Noted, sir. So just lastly, when we will be spending capex on the 500,000 ton aluminium smelter, when we can expect that project to take off and the capex will start going in?
That will happen to be capex will start in 27, but that will be starting of the capex. but the main capex cycle will start in 28, 29, and 29, 30 will be the peak capex cycle, and we'll be completing it by 30 or 31 first half. So we'll be starting in 27, and 3 years we'll be completing our 0.5 million ton smelter.
Okay. So what could be FY27 and 28 capex figures if we need to build in our estimates?
For 0.5 million ton, it will be around 18,000 crore.
No, 27, 28 is asking. 27, 28 CapEx will be around 4,000. Around 4,000 to 5,000 crores will be 27, 28. After that, the CapEx will further increase. Next 3 years, it will go to around 8,000 to 10,000.
Because smelter will come with a power plant also. 270 into 4 megawatt power plant also is there. So capex will be considering both of the projects.
Okay. So majorly 4,000 crore, majorly for the smelting plant in FY27. Is that a correct assumption?
Yes. Yes.
Yeah. Thank you, sir. That's all from me. And all the best for future.
Thank you. The next question is from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, thank you for the chance. I got disconnected, so please excuse if it's already discussed. My first question is on coal. Can you just remind us what was the captive coal production for FY26? And for 27, what is the expectation? And then the remaining coal, which is roughly around 3 odd million tons, which we are buying from Coal India. If you could just share what is the mix between linkage and e-auction.
As far as our coal production, FY26 we have done 4 million ton, and this year we are targeting 4.8 million ton. The rest of the coal we are taking through FSA linkage route from Coal India. E-auction, very less quantity we are taking. I think out of the total quantity, around 10%, 15% only we are taking from e-auction route, out of the remaining around 2.5, 2.6 million ton. Rest we are taking through linkage route.
Okay, and roughly what would be the cost difference between linkage, e-auction and captive coal?
Between our captive and this linkage coal, the difference is around 300 rupees, 300 rupees per ton. And in captive to linkage, if you see it, like captive to e-auction, it will be around maybe 600 to 700, no? 600 to 700.
Our, sir, in 25-26, our linkage coal cost is around 1,800, and our captive in Utkal grid is 1,500.
300 difference. But in captive and linkage,
e-auction coal is slightly higher.
Around 2,100.
Yes, 21.
So it will be around 600 difference with e-auction. But e-auction very less quantity we are taking. Around only 10 to 15% of the total requirement.
Especially for Damanjodi, we are taking e-auction.
Understood. That's very clear. So second, on the employee cost, can you guide us for next 1 or 2 years? What is our expectation? What is the employee count currently? And what is the retirement expectation over the next few years?
On an average, yearly retirement is around 250 numbers will be retiring next 4-5 years. Our recruitment this year will be doing around maybe 200, 250 recruitment this year. Next year we will see as per our requirement we will do. So employee cost will go down because the retiring people are in a very high scale of basic and DA they are in. So that will further go down because you see this year our overall employee cost was around 1,721 crores overall expenditure on employee. And last year it was 786. 65 crores we have saved on employee cost. And it is coming overall 10% of the overall expenditure. So it will slightly reduce.
What is the count today? Around 4,600?
Strength is around 48.
Sorry, 48?
4880.
Okay, because we were expecting the similar around 300-400 reduction recruitment of 200 odd, but year on year there's no change. Last year also, whatever number I have, it's around 4,800.
Yes, yes. Similar kind of thing, the people retiring and similar kind of people we are recruiting, same number. But our fifth stream which is coming, since we are going for expansion, the fifth stream which is coming, for that we'll be requiring an additional manpower of around maybe 200 to 250, for which our recruitment process has started. So that in that area, since our volumes will also be increasing, so some additional manpower will be required there.
Okay. And the pay commission impact, when do we start seeing that? What is the estimate?
Pay commission impact will start from January 27.
There will be some impact on because of improvement the last quarter of this fiscal and from next financial onwards. Average increase will be 10 to 15%. But if you see the overall cost, because our volume will increase, so if you see the per ton of cost, it will be coming down. Though the absolute figure may go up, but per ton cost will be coming down because of our volume.
Okay, so roughly around 2,000 odd crores is what we can expect from FY28.
FY27, 28, now it is 1,700, it may, yes. 100 crore may additional cost. 15%? 15%.
Got it. All right, thank you and all the best.
Thank you.
Thank you. The next question is from the line of Darshan Mehta from Dolat Capital. Please go ahead. Mr. Darshan Mehta, please go ahead with your question. Your line is unmuted. Mr. Mehta, can you please proceed ahead with your question? As there is no response, we'll move to the next question, which is from the line of Naresh Naikar from Systematics. Please go ahead.
Yeah, very good evening, sir. Thank you for giving the opportunity. So I have the questions on chemical segment. If you see the revenue was steep fall, it is 12% decline from 7,600 crore to 6,694 crore. So I want to know what are the main primary factors this happens, and when the situation will normalize. And going further, how do you see the volume and realization on this segment?
So you are talking about reduction in the revenue from chemical sector, no?
Yeah, revenue and margin both. Yes, sir.
Chemical sector, you see, our prices has gone down by around $219 compared to last financial year, which has resulted into less revenue of around 2,659 crores. That is the amount of loss we have suffered due to reduction in the spot prices. But we have compensated it by increasing the volume. We have sold around 3.4 lakh tons of excess of alumina by increasing our volume production, which I have told earlier also that we are targeting to increase the volumes. We have increased the volume of around production by around 2.5 lakh to 3 lakh tons. So it has given us additional a favorable impact of around 1,714 crores. So net adverse impact of alumina is around 784 crores only, in spite of 2,660 crores of adverse impact due to pricing.
Okay. Yeah. Thank you.
Thank you. The next question is from the line of Akshay Mehra from Nirzar Securities. Please go ahead.
Thank you for the opportunity and congratulations on a very good set of numbers, sir. Sir, what would be your view on the alumina prices going forward, looking at the amount of surplus that is available due to shutdown of some of the smelter in Middle East, etc.? Do you think that it's now at the bottom, or do you see still scope of the prices going down? That's number one. And also similar outlook on the prices of aluminium. Yeah.
As far as alumina prices are concerned, it is almost on the bottom. We are whatever spot tenders we are doing, we are getting the price of around $310 to $320. In few tenders, we are getting $330 or $336 also. But what we are expecting this financial year, it will be somewhere around in between $300 to $310 average alumina pricing will be there. Metal pricing, of course, at present it is at the peak around maybe $300 3,600 LME is there. We are expecting that it should be somewhere around average. If we see the average of the total year, somewhere around 3,000, it will come down once the wars are over and all that, the situation normalizes. But somewhere around 3,000, because already the demand supply gap will be there. We expect that it will be LME somewhere around 3,000 average we will be getting.
All right, sir. And as you have mentioned that our prices are linked to LME, and we do not do more frequent revision in our prices. So can we assume that it is basically some sort of a long-term arrangement?
It is not a long-term arrangement because LME keeps on changing, and every 3 days we keep on changing our price as per the variation of the LME is there. And the premium, we do the export tenders. Every 6 months we do the export tenders. In between also sometimes we do. And depending on whatever the premium we are getting on the export tender, we fix up the premium.
Formula is fixed.
So how much would be spot and how much would be long-term contract in alumina and aluminum both?
So telling alumina is going on spot tenders because every month 4 shipment we are doing on spot. We have done a few of the tenders on the long term, that is 3 month and 6 month tender also. Now at present we don't have long term because since the pricing is very low, we are not going for the long term now. We are only relying on the spot tenders. Once the prices slightly stabilizes, these war situations are over, we will try from some long-term contract also.
And are we on track with our expansion plan for alumina and aluminum?
Alumina fifth stream expansion, our target was June we will start the commissioning. June we will be starting the commissioning. Commissioning process takes 3 to 4 months because it is a chemical plant, process plant to stabilize the production and reach to the 50-60% of the rated capacity. So as far as of now, we are on track. Maybe 1 or 2 months delays we are expecting, depending on what happens when we start the commissioning process.
That was helpful, sir. Lastly, we have also mentioned in our results that the board has decided to discontinue the Utkarsh JV with Mishra Dhatu Nigam. So, are there any plans for going in value-added products? Because earlier it was envisaged that we will be going into value-added products in defense and aerospace and like that. So, what would be the plans going ahead? And how much would be the right be taking?
Actually, Utkarsh JV was made, and that basically at that time the forecast was that the growth in the transportation sector will be there. Of course, defense sector requirement was there, but defense sector requirement was very less. And the kind of capex involvement was there, around 4,500 to 5,000 crores capex was required for that. And as of now, the requirement in the transportation sector has not grown like that. That's why it is not looking that much favorable. Even the IRR with the capex investment was coming negative. That's why we are not going ahead with that. As of our existing plant is concerned, we are going for one more wire rod mill to increase our wire rod production. Wire rod also we consider as a value added, and the new wire rod mill will be producing more of a alloy grade wire rods and good quality wire rods. Around 60,000 tons of wire rod mill we are going in. It will take around 2 years. Our flat product, rolled product plants, we are adding one annealing furnace that will increase the production from our rolled plant. Rolled plant on an average we are doing around 2,000 per month. We are targeting from this year onwards around 2,500 tons per month. That will again be a value added. These are the 2 areas where we are working to increase our value added presence in the existing operation. Of course, in our expansions, we will be targeting more of a value added, that is wire rods, maybe some rolled products, or maybe billets, something like that.
That was really helpful, sir. Thank you so much and wish you all the best.
Thank you.
Thank you. The next question is from the line of Jay Thakkar from Pinnacle. Please go ahead.
Hi, sir. I'd like to know, in the beginning you mentioned that your additional capacity in alumina would be 2 lakh tons. That was your optimistic approach, right? What would be your conservative approach?
I think I don't know. It's very difficult to tell. It depends on the commissioning process. Optimistic and conservative, 2 lakh is the minimum we are targeting. It can go to maybe 3 or 3.5 lakh also, depending on the commissioning process.
Oh, okay. Okay, got it. My other questions related to pricing were answered. Thank you very much and all the best.
Thank you.
Yes, ma'am. Any
Disconnected.
Hello.
Yeah. Yes, please.
Yeah, I just said thank you, all the very best.
Okay, thank you. Thank you. Ma'am. Okay. Ma'am.
Yes, sir.
Yes, ma'am. Any other questions? Any other? We are audible to you?
Yes, sir. The next
Yes,
question is from the line of Rajesh Majumdar from 361 Capital. Please go ahead.
Yeah, good evening, sir, and thanks for the opportunity. I actually missed out on the employee cost increase in FY28 on account of the pay commission. What is the percentage increase you said in FY28 will happen on the employee cost?
Around 10 to 15% increase in the employee cost will be there. That will be the impact of pay revision in between 10 to 15%. It can be around 12 to 13% also.
Okay. Right. And my second question was on alumina exports. What is the figure for the exports for the year? Because you have given the total alumina hydrate sale of 14.46. But what is the export figure and what is the domestic sale?
If you see the export sales, we have done alumina export sales. We have
1.38 is domestic.
1.38 is domestic, and
the 14
export sales we have done around 13.09 lakh tons, and around 1.37 lakh tons of domestic sales. So total
1.37 lakh tons. Is this calcined alumina or special grade?
It is combined, calcined and hydrate, both.
Okay. And special grade alumina, what would be the production?
Special grade is very less. We are producing around 15 to 20,000 annually. That much amount only is there. That is also included in this.
Okay. And in the new capex, there is no increase in the special grade production. It's all calcium alumina, right?
No. Only calcined and hydrate will be there.
Only anhydrate, yeah. Okay. Fine. And so my last question was on the aluminium smelter and power plant. Initially, we had talked about putting the power plant in a kind of joint venture structure with NTPC or somebody like that. But now, are we doing it on our own entirely? Is going to be the full capex to be borne by NALCO or there's no joint venture?
Already, we are into agreement with Neyveli Lignite. We have signed one MOU with them. We are in the advanced stage of negotiation with them, with Neyveli Lignite Corporation, for forming a JV company in which 50-50 partnership will be there. Because Neyveli Lignite has got a coal mines here in Talcher, and that will be very near to our CPP. So we will be having a coal security also for our expansion. So now we are in the advanced stage of forming a JV company.
So the entire capex is not going to be borne by NALCO?
Yeah. The capex will get shared by both the JV companies.
Right, sir.
CPP.
Just one last question, sir, if I could squeeze in. If on the bauxite royalty, if I look at the other expenses sheet, the figure on royalty has varied a lot. In the COVID years, it was like below 200 rupees per ton. And then like now, after COVID, it was 600 and now it is somewhere around 300. What is the figure of the royalty and what is the royalty charge on the new bauxite mines? And will there be any revision in the royalty on the old bauxite mines?
Royalty is adjusted to the alumina.
Let me see.
Royalty figure will changes since the LME is high, royalty will be high by percent because it is calculated back calculation.
So it is not specific. It is what is the percentage?
Percentage of royalty
to LME, yes.
A percentage is 0.56%. I think it is calculated content of alumina and the bauxite. In that pattern it is calculated. It is coming around royalty per ton 450, 60.
Presently it's coming around 400, but if LME increases, it will go further.
Got it, sir. Got it. And on the new mines also it's the same.
Okay, quality is almost 42% alumina, and if it is directly linked to LME, that's
more of it. On the new mines also the royalty will be same.
Okay, thank you very much. Thank you.
Thank you. The next question is from the line of Rakesh Roy from Omkara Capital. Please go ahead.
Hi, sir. So my first question regarding export market. Maybe I missed, sir. As you said, 40 to 50% of your export come from Middle East, sir.
40 to 50% of export, you are talking about chemical?
Yes, sir. Yes, sir. Alumina.
Alumina, our total sales last year was around 3.4 lakh. We have increased. Total sales export we have done around 13 lakhs and domestic we have done around 1,37,000. So export sales is domestic sales is almost around 10% of the export.
And how much is from Middle East, sir?
Middle East, what I was telling earlier also, around 40 to earlier 50 to 45 to 50% used to go to Middle East, maybe sometimes more also. But now it has gone down.
And what is the outlook for FY27, especially for Middle East export? This will come down further?
It will depend on the war. When the war ends, it's very difficult to predict. If the war ends, and because now the route is also closed, whatever route is there, whatever alumina was going, it is going to the state of Hormuz. So that's why they have to take it to some road route. So it's very difficult to predict now.
Right, sir. My last question, as you said, alumina price will come down again for $300 to $310. Any impact on margin front for this will come down because of
any impact on margins you are telling? Margins already. Margins means already compared to last year, it has gone down. Because last year our average alumina price was in 25-26, you see it was $376 average which we have got. In 24-25 it was $570. Now this year we are targeting around, we are expecting that around $300 to $310. So that will go down.
And how much is go down as per your calculations?
I think it will not affect the margin as a whole, because if we not getting price in the alumina, but it is being compensated through metal price. Because the average
he is talking about alumina.
Alumina to down needs to come whole. But Nalco overall, I think there will be no impact on the price front.
Getting from the metal.
Agree, sir. Why I'm asking, because as you say, the aluminium price will go near to 3,000 rupees in the peak now, but alumina price will come down. So your aluminium price will stay down 3,000, but alumina price will come down compared to last year. Then overall margin will come down, sir?
Overall margin will not go down. You see our overall revenues, around 70% of our revenues is coming from metal, that is aluminium. And 30% of our revenue. This year it went down to around 27%. 73% from aluminium and 27% from alumina. So we are getting better margins on aluminium. So it will not reduce. In fact, it will increase our margins.
Right, sir. Right, sir. Thank you, sir.
Thank you. The next question is from the line of Ashish Kejriwal from Nuvama Wealth Management. Please go ahead.
Yeah, hi. Thank you for the opportunity. quickly give a few questions on the raw material side. Are we seeing how much price increase in coal which we are buying from e-auction? What kind of price increase we have seen in last 2-3 months? 2 months actually.
E-auction actually very less quantity coal we are buying. Only suppose if we are buying around, we are taking coal from FSA route through Coal India NCL, that is around 2.5 million ton. Out of that, around 10 to 15% only buying in the e-auction route, and that is approximately 200 to 300 more than the fuel supply agreement जो हमारा उनके साथ में FSA route linkage route से. So 300 rupees more we are getting.
So sir, actually in last 2 months, have we seen any increase in e-auction coal price in last 2 months?
2 months, I think we have not done any. We have done last 2 months. We have not done any.
Recently, we have gone for 190. In e-auction coal, if you compare with the last year average price and current year, there is a reduction because it is a notified price plus some premium. So last year it was average cost to us is 2,700, and this year 25-26 it is 2,400 total. So there is a trend of reduction of price if you compare with the previous year. So
understood, sir. I was just looking at last 2 months because we have seen increase in reduction.
Telling about 2000 due to war situation, you are telling any increase in the
yes. Price come.
No, it is not increased. In fact, it is not increased because there is an excess of coal available also. The coal production capacity has increased. So evacuation is the main issue. So e-auction coal prices have not increased.
Thank you. The next question is from the line of Kartikeya Kumar Pandey from 360 Capital. Please go ahead.
Hello, am I audible?
Yes,
Yes, you are.
Yes, sir. Most of my questions are answered. I just sorry if I'm repeating the question again. So can you just briefly mention the capex numbers that you mentioned, I guess, to a participant before for 2027, and then factoring for aluminum capacity?
This year, that is 26-27, we are targeting a capex of around 2,000 crores. Next year onwards, that is 27-28, what I told earlier also, somewhere in between 4,000 to 5,000 crores. And after that, the subsequently year, it will further go up. That will be the peak time of smelter erection and all that. That will go to maybe 7,000 to 8,000 crores.
So in totality, 30,000 crores that you are saying.
It is not 30. Actually, it is smelter is 17 to 18 and our power plant is around 12. Since power plant we are going for JV, so only 50%, maybe 5,000-6,000 will be requiring for that. So it will come down to around 23-24.
Okay, thank you.
Thank you. The next question is from the line of Vedant Sarda from Nirmal Bang Securities. Please go ahead.
Thank you for the opportunity. So can you please give the aluminum realization for Q4 FY26 and the current realizations?
Relation of, you are talking about alumina or metal?
Aluminum, metal.
Aluminum average realization which we are getting is around 3,600 LME hovering. But now just because of war situation and all that, it has increased. But what we are expecting, it should be somewhere around 3,000 or 3,100 for the average throughout the year.
And Q4 realization? FY26 Q4?
Q4 it was around $2,767. Q4 average 25-26.
2765.
Yes.
Hello.
Yes.
2676.
2767.
Sir, you are expecting aluminum prices to come below 3,000 going forward in the financial year 2027. So the average would be 3,000. Like it is currently hovering around 3,500, 3,600.
Of course, this 35, 36 is a very escalated thing due to war situation, because already some of the smelters are closed down, the capacities are reduced. Once the smelter come to the capacity, everything is normalized. So that demand supply gap will further reduce. And at that time, the LME may go down.
Like before this smelter disruption, before this war, aluminum was hovering around 3,200 to 3,300. So that's
Yeah.
why I was asking.
Yes. That is optimistic, which we are thinking it can go down to maybe 3,000 also, but somewhere around 33,000 to 3,100.
Thank you, sir. Thank you so much.
Thank you.
Thank you. The next question is from the line of Arjun from Chasing Lakshmi Investment. Please go ahead.
Hi, sir. Good evening, everyone. So, congratulations on the robust quarter and annual performance. My question is in three parts. The first is the fifth.
I'm sorry to interrupt you, Mr. Arjun. We are unable to hear you clearly. There is a lot of disturbance from your line. Mr. Arjun, can you please check? Hello? Mr. Arjun, can you hear us? As there is no response, we'll move to the next question, which is from the line of Darshan Mehta from Dolat Capital. Please go ahead. Mr. Mehta, please go ahead with your question. Your line is unmuted. Mr. Mehta, may we request you to please unmute yourself and proceed ahead with your question. As there is no response, we'll move to the next question, which is from the line of Saket Kapoor from Kapoor and Company. Please. Saket Kapoor,
Hello?
please go ahead with your question.
Yeah, namaskar, sir. Hope I'm audible.
Yes, namaskar.
Yes, sir. Sir, firstly, if you could please explain the key reason in terms of our profitability taking a dip for the alumina segment year on year, and if you could give us some color on what are the current price trends with respect to alumina.
You see, as far as alumina is concerned, profitability, I told earlier also, this year in alumina segment, our volumes has increased. Our volume has increased by around 3.4 lakh tons extra sales we have done compared to 24-25. 24-25 our production was 20.75 lakh tons. This year we have done around 23 lakh tons. So this has given an advantage of around 1,714 crores. Of course, the prices have gone down. The prices have gone down from 595 average in 24-25 to 376 average in 25-26, which has resulted into negative impact of around 26.59 crores. Overall, if we see, the adverse impact is in alumina segment as compared to 24-25 is around 784 crores. So that is there because of reduction in the prices. But we have also improved in the efficiencies like caustic soda consumption and all that. That has given some advantage of around 100 to 150 crores. So coming to this year, if you see this financial year, our volumes will be from existing refinery will be almost similar kind of volume because we have reached to the peak of around 23 lakh tons. Fifth stream, which is additional refineries coming, 2 lakh further will be added. So similar kind of figures because prices will further go down. The prices of alumina, which is average was 376 last year, that is 25-26, will go down to around maybe 310 or 320. So that will be having another financial impact of maybe around 1,000 or 1,200 crores.
Okay, and sir, then how are we penciling in this $310 mark? Have we contracted for the entire year in terms of that, or are the current spot prices are hovering in those levels? How have we factored in that? Yes, sir.
Current spot prices are at the level of 310, 320. Sometimes we are getting 330 also. But the kind of situation which is there is an excess of alumina in the market. There is an excess of alumina from Indonesia. The requirement has gone down. That's why we are expecting the prices may not go up. It will be hovering somewhere around 310 to 320.
Okay. Sir, earlier there was a formula on the basis of the LME prices, say 12 to 13%, correct me there, of what the LME prices for aluminium, that was the price trend for alumina. So has that trend taken some headback because of the availability of alumina, or what should we factor in when we
That
see?
is because of availability only. Because earlier we have got in long term around 15-16%, 17% also of the LME. But now when we are going for long term agreement, last long term agreement we got around 11 to 11.5% only. And the main reason is the excess of alumina in the market.
Okay. And so then for the metal part of aluminium, what are we penciling in terms of the current year? Means the profitability shift has taken, there is a significant profitability shift when you look at the segment results towards the higher aluminium prices. So what should investors penciling in terms of the profitability from the aluminium segment with the type of price trend that we currently have, and also the incremental volume of the metal that we can produce and sell for the coming year?
As far as the volumes are concerned, metal also we have reached to the peak because our capacity is 4.6 lakhs. Last year we have done around 4.71 lakh tons of cast metal. And this year we are targeting slightly more, that is maybe 2,000-3,000 more. But we have already picked out. Volumes will be almost similar kind of volumes. LME as of now is on the higher side, that is 3,600 or maybe 3,550 it is there. But once the situation normalizes, the smelters again start producing, the LME will come down surely, because now the supply is also not there from the Middle East to the other parts of European where from Middle East was going. That's why also they have reduced the production. So LME will reduce to around maybe it's very difficult to predict, but what we are thinking is somewhere around 3,000 to 3,100.
Okay. And so for the first quarter, the quarter which is now in the month of April, what has been our average sales realization for the aluminium metal, and how much have we contracted for the remaining part of the quarter?
This quarter, first quarter, like this month, our average realization is somewhere around 3,600, 3,550, 3,600 we are getting this month, that is April. And May also we are expecting the first quarter will be good. First quarter we will be averaging around maybe 3,500.
Okay. So there will be a significant contribution from on the higher realization from the aluminium segment, whereas for the alumina part we will be in the same vicinity of $310 to $315.
Right.
That was yes, sir.
If the metal price, if you see our average metal price for the last year, 25-26, our profitability based on the average metal price is 2,674, the whole year average. If Sir is telling that if our aluminium price varies from $3,000 to $3,100 for this fiscal 26-27, so we'll be getting $400 more. So that is a comfort zone we are expecting. Though there is some reduction in the alumina prices, but we will be getting that comfort in the metal price. If the whole year metal average price behaves in the range of 3,000 to 3,100.
Okay, sir. And sir, so just to model it out, the quarter 4 numbers give us a base in terms of what we can expect, taking into account the current evolving situation. So we should be setting this pace of say 2,300 PBT number. That should not be trending lower if the cost component does not go higher. This understanding is correct on a.
That is correct. Almost that is correct. If we produce that much of volume, then we are expecting that profit of more than 2,000 plus first quarter. Because price is in our favor.
And on the volume front also, sir, we have said that we have already reached the peak in terms of both the alumina and the aluminum, whatever production or dispatches we can do. So going ahead, we are not going to see any incremental volume for the coming financial year. Advantage of any incremental volume?
Financial year, whatever incremental will be coming from, will be the additional fifth stream refinery. So from the existing refinery, almost similar kind of volumes will be there.
And the new stream will be, sir, commencing in which quarter?
We are starting, the commissioning process will be starting in June, and the commissioning process itself take around 3 to 4 months. So maybe in the last quarter only we will be able to have the production from there. That's why we have targeted only 2 lakh tons from the new refinery.
Okay. And for the next year as a whole, sir, what would be, it will be ramped up to how much?
So next year the capacity is 1 million ton, that is 10 lakh tons. So next year onwards it will be doing 1 million ton.
Okay, and in terms of selling of the product, it will be totally, sir, it will be catered to domestically, or what percentage will go towards as an export? How have we arranged the selling arrangement part?
Like this year out of total sales, whatever sales we have targeted, this year around 2 lakh, I think 2,50,000 we have targeted for domestic. That we have targeted for domestic. And export will be around, I think 13 or 14 lakhs will be export. So domestic will be around somewhere around 10 to 15% of the export.
Okay, majority will be towards the export only, as has been the case for the current year. Okay, and lastly, sir, towards this the caustic soda part, and how is our, sir, Jinal, the JV which we have with Gujarat Alkalis, how have been the performance from the same, and what should we anticipate going ahead from the same?
You see, Jinal JV in last financial year, that is 24-25, it has given a negative impact of around how much?
Their total loss is 38 crore.
This year only 38. But last year it was...
Last year, they have reduced the loss from 135 crore to 38 crore. Because 24-25, they have incurred a loss of 135 crores, but they have brought down to 38 crores this year. And most importantly, the last quarter, they have made a profit of 11 crore. That is the very positive point for...
we expect that this year again they will turn to profit, and the negative impact they are having, which will further reduce.
Getting some
money from
them.
Okay, and sir, how have the price trends been for the caustic? The cost which we have incurred through this JV, although it is at arm's length, how have the caustic soda prices trended?
For JV, you see, whatever prices we do, the rest of the quantity, 50% of the quantity we take from the market. So whatever pricing cost we are getting from the market, that is applicable to JV. Give us at the same price.
There is no price concession.
Yes, sir, there is no price concession. That was I'm asking, how have the price trend been for the caustic soda for the quarter ending March 26?
Price trend is like last year, 25-26, it was 42,177 rupees per ton average. The quarter 1, 26-27, what we are seeing is it will be around 45,000. There is an increase of around 3,000.
Okay, from last year averages, it will be higher by 3,000 for the first quarter, June quarter.
Quarter 1, quarter 2, because we have ordered for 6 months. The first 6 months will be around 3,000 more.
Okay, sir. And lastly, sir, on the CWIP, the closing balance was 6,300 crore. So, what portion will get capitalized for this year, and what are the facilities? I think so.
I think 100% will be capitalized this year, because the majority is towards the fifth stream expansion. It is around 5,500. So if we capitalize from June onwards, so I think this year the whole WIP will be converted to asset capitalization.
And all the backward integration part for the coal availability on the coal mining part, sir. How much? What is the current update on the same? How much of the coal are we mining ourselves and through the MDO route, and what?
You have answered that question earlier.
Very sorry, sir.
You see, the total coal requirement is around 7.2 million ton. Out of that, our own production will be around 4.8 million ton, and rest will be taking mostly from our linkage route from Coal India, and around 5 to 10% we go for e-auction.
Sorry to interrupt. May we request
Yes, ma'am.
Mr. Saket
Yes, ma'am.
Kapoor to please
Yes,
rejoin
ma'am.
the queue. Thank you very much. The next question is from the line of Ashish Kejriwal from Nuvama Wealth Management. Please go ahead.
Yeah, thanks for the opportunity, sir. Sorry, I got disconnected that time. So, sir, I think you mentioned that e-auction coal prices, we have not seen any major increase in last 2 months. That's right?
Yes, sir.
Okay. Sir, secondly, the way you mentioned about caustic soda price, is it possible to share your different raw material prices like CP coke, CT pitch, and aluminum chloride, what it was in FY26, and then what?
You see, caustic soda prices average 25-26 was 42,000. It has gone to 45,000. CP coke 25-26 it was 53,000. This year Q1 and Q2 it will be somewhere around 57,000. Aluminium fluoride 1,21,000. It has gone to 1,30,000. HFO has further increased. HFO and LDO, that is the substantial increase which we are seeing. LDO तो कम लगता है हमारा, HFO ज़्यादा लगता है, from 46,000 to 70,000. So this kind of increase we are seeing in caustic soda, CP coke, aluminum fluoride and HFO.
And so what about CT pitch?
CT pitch is almost same. CT pitch, 1 minute. CT pitch, no, it has gone up from 44,000 to 56,000. CT pitch है ना, the CT pitch has gone up from 53,000 to 57,000. Oh, sorry. CP coke has CT pitch from 53,000 to 57,000, मतलब around 4,500 increase है CT pitch में, and CP coke from 44,000 to 56,000. इसमें भी around maybe 11-12,000 का increase है.
So, sir, matlab, if I'm looking at from FY26 average versus first quarter, we are seeing increase in all our raw material prices. I think that is only been somewhat offset by, I don't know from where it is being offset. So your cost of production definitely should increase from what we are talking about 150, 155. Isn't it so?
Yes, cost of production will increase.
So when we are talking about 155 to 160, that was for Q4 or FY26?
155. One average cost is around 155.
Yeah.
156 for the whole year. If you see the Q4, it is around 1,57,50. So we are taking a highest rate of 160. It will, in any case, it will not go beyond 160.
Understood. And so lastly, what could be our power cost per unit?
Power cost per unit is around 3.15.
This is at EBITDA level we are talking about.
EBITDA level, it is coming around from, if you see the expenditure, it is coming around, power cost is 31% of the total cost. Yes, total cost. If it is the revenue, it is coming around.
So, sir, actually I was trying to ask, what could be our...
15%.
What
revenue?
Okay. So I was looking at, sir, what could be our power cost per ton of aluminium. So when we are talking about 155 to 160,000 per ton of aluminium production,
yes,
what could be our power cost in that?
It is coming around
31%, no?
55 to 60,000.
55 to 60,000.
Okay, sir. Thank you so much. That's helpful.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to Mr. Bharat Kumar Sahu for closing comments.
Thank you, ma'am. On behalf of NALCO, I thank all participants who took out their valuable time and shared their views and took interest in NALCO's growth journey. We thank you, Team Chorus, for facilitating this earnings call for Q4 and FY26. And we are also thankful to Systematics Group for hosting the earnings call. We look forward for similar kind of cooperation on continued basis. Thank you. Thank you all.
Thank you.
Yes,
On
thank you.
behalf of NALCO. Yes, sir. Please go ahead.
Okay, thank you. Okay, you go ahead.
Thank you, sir. On behalf of NALCO Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.